Okay, I think we're ready to go. Hello, everyone, and thank you for joining us for a 30-minute Q&A session. Everyone can begin to submit their questions using the Q&A button on the bottom of your screen. My name is Josh Rogov, and I'm the president of CR Solutions, a wrap-up administration firm. CR Solutions specializes exclusively in wrap-up administration for large-scale construction projects. We've been servicing the construction risk management industry since 2002. Joining us today, all from our Alpharetta, Georgia office, is our COO, my partner, Jennifer Philippi. Jennifer heads up all operations for CR Solutions. We also have on the line and on our panel an account executive, Leah Stewart. Leah heads up our GL-only group, and another account executive, Amy Lamb, and Amy heads up our certificate tracking group. So we feel we have representatives from most of the service offerings that CR Solutions has, so we're awaiting any questions for any product that we service. Just a note, we will be sending all registrants a copy of the slides, the webinar recording, and a PDF with questions and answers from today's session. So we had a few questions that came in beforehand. I don't see any questions in the queue yet, so hopefully some questions will come in. But let's start with first two questions we got from Peter, a broker up in Massachusetts. Jennifer, we'll start with you on this one. What effect has the hardening market had on pricing and carrier participation? Have wraps become more or less competitive with traditional insurance?
Yeah, good question. So, I think we all know that when we see a hardening in the market in terms of the cost of the wrap-up programs, we can expect to see the hardening in the cost of the subcontractor insurance as well. So depending on when in the cycle the market hardens and when in the cycle the program's written versus when the subcontractor policies are written, there may be some lag in terms of the subcontractor costs kind of lagging behind still in that softer market pricing versus that wrap-up pricing. But all in all, they will catch up with one another, and you'll see that they will parallel one another in the long run.
Great, thank you. Another question we had from Peter was, and I think we'll go to Jennifer to answer more from a full wrap-up perspective, and then maybe we'll get Leah's response from a GL only. How often are you tracking contractor credits, and how much does it add to your admin costs? So Jennifer, we could start with you if you want.
On the byline programs, I would say that you're most often being asked to look at deducts on owner-controlled programs. The contractor-controlled programs tend to pass on those costs through their budget back to the owner. And really, it's not as often these days as it used to be. It seems that people are buying it for risk management reasons, and that they're counting on a competitive bid practice to ensure that the costs are being removed from the contract. So I would say they're few and far between on the byline programs and primarily with owner-controlled programs.
Okay, great. And Leah, what would you say on the GL onlys?
Yeah, I would second that comment just on credit verification and deducts being involved more with owner-controlled programs. But I would also add that with a GL only, a lot of times the administration piece and the wrap-up piece comes along a lot later in the process than it would on a byline program. And so what happens there is that most subcontractors, since they weren't told to bid excluding insurance or net bid, you end up having to being pretty much forced to go the deduct route. So that's what we see on a little over 50% of the GL onlys we have is the deduct route.
Great. And I have another question actually for you, Leah, that just came in because it falls in the deduct subject. This is a question from Nancy. I have a question regarding calculating deducts on flat-rated, non-auditable policies like excess and umbrella. Can you walk through how these deducts should be calculated?
Yeah, so that's a great question and one that we get a lot. We, since our general liability and excess liability programs are providing the excess liability portion to the enrollees, generally our clients want to get a credit back for that excess or umbrella because there are charges included in the bids, and that coverage is being provided to the sub. So it's only fair that the sponsor receive that credit back. As far as calculating that, how we typically instruct the sub to do that is to do a simple calculation by taking their total umbrella premium and dividing that by their general liability exposure, and kind of prorating that rate out. And then if for some reason we aren't able to obtain the total umbrella premium, or the total GL exposure is rated on several different things like payroll and receipts, we could always use a default percentage, which we typically see umbrella or excess credits fall about 50% of the GL. So that's typically what we would expect.
Great, thank you. Amy, we're going to go to you because these are cert tracking questions. These came from James, who's a broker down in Texas. Is collecting wrap-up exclusions really necessary while a wrap-up program is active?
Hi, James. Thank you for your question. Yes, we typically say that collecting wrap-up exclusions is important even when the program is active. And the reason is obviously if the subs are enrolled, they're being provided coverage through the program, but excluded subs are not. And with some of the exclusions that have come across our desks at CRS, the language is so vague that they may not even be provided coverage if they're excluded from the program because they're involved in the wrap-up itself. So it's always a good idea to look at them and make sure that the coverage is there. Also, as these programs tend to get to the end, it's always good to have these wrap-up exclusions on file. So if you need these subs to come back to these projects after they're completed, we already have the resources to look at their coverage and see if they're able to continue work after the program's over. Great.
And this was another question from James. Does CRS get involved with tracking subcontractors' insurance for non-SIP jobs? And if so, what is the average compliance maintained for traditional insurance jobs, and how do you maintain it?
So actually, yes, we do. That's actually what my entire department does, is track insurance for standard insurance jobs. We try to maintain a 90% compliance or higher after we onboard a client for their compliance percentage. And we do that through our proprietary software Certify that's set up to track these coverages and endorsements. The software is wonderful in the fact that it communicates outward to these subs and the brokers so that we're able to maintain their compliance and get them compliant a lot quicker. We also have a phenomenal team, my team, obviously the certificate tracking team, that works with these brokers and subcontractors daily to help them not only maintain compliance, but understand it. And then we also provide for our clients, they have access to our certificate library through RapSheet, as well as some compliance reporting features that we have to help communicate where their subs stand.
Great, thank you. This question just came in from Adam too, and I'll go to, I guess, Jennifer and or Leah probably, and one of you guys can jump in. What have been some of your strategies when dealing with a self-insured contractor who's fighting to provide an appropriate credit for their insurance on a project? How have you been able to maximize the credit for the wrap-up sponsor while maintaining a good working relationship with the contractor?
Yeah, you want me to go first?
Yes, please.
Okay. So the idea of the program is to remove the cost that the contractor includes for insurance in their contract, right? So even when you are able to get like a guaranteed cost rating paid, all we're able to verify from that is that's what the contractor would have otherwise paid for their insurance. We're not necessarily able to see from that rating page that that's what they're including in their cost. So we treat these self-insured workers just the same as we would with the others. We want them to provide whatever backup they can to show what cost they included in their contract. We do try to uncover what cost they would incur themselves by looking at loss history and things like that. But we can also do some other detective work in looking at if there's a detailed labor rate breakdown provided for like change order pricing. We can look at what costs are included in there. If they happen to itemize out their bid where there are costs, then that's a much easier straight line removal of things. But really, we're then going to be trying to look at any kind of running policy documentation and loss history information to see what those costs they would, what costs they would incur. Anything
Leah-
else on that, Leah?
Yeah, Lee, anything you want to add or?
No, I would say that's it. That pretty much follows exactly what we would look into, and just making sure that we exhaust all efforts to really ensure the client that we're getting that fair deduct. Yeah.
Great. Leah, another question for you. This is from Drew, a project executive in Georgia. How long does it take to enroll a subcontractor?
Yeah, so that's a great question. We typically request at least a 5 business days notice prior to the subcontractor starting work on site. We know that, you know, there is construction going on site and things need to be handled in a timely manner. So usually we'll respond or reach out to that sub within the same business day as receiving that notice. And then following that, we're really the quickness of the enrollment is going to depend on the sub's responsiveness. So we're going to follow up with them every couple of business days to ensure that they have all their questions answered, they have the enrollment forms in the right hands, and really stay on top of them for that. But because of our online enrollment process and the individual account associate that's going to walk them through that enrollment, we really say that's why we only ask for that 5 business days. Now you can get an enrollment, we can process an enrollment within minutes of it being submitted. So I would say, yeah.
Okay.
Jennifer, do you have anything to add to that?
I would just say that the timeliness of enrollment totally depends on the subcontractor's responsiveness. And then to Leah's point, we do everything we can to walk them through and make sure that the process is quick and easy. But our side of it's really quick. It's just getting the subcontractors to respond.
Yeah, and I think you'd all agree. I mean, with over 15,000 subcontractors in our database as well, a lot of the times we've actually touched a lot of these contractors, so it also speeds up and expedites the process.
Yeah, good point.
Yeah, exactly.
Jennifer, this is a question we received from Spencer. I see you have some international projects. How do you handle those?
Yeah, so international projects are interesting and actually relatively simple. So one of the first best practices in setting up a wrap-up is making sure that you have documentation in terms of procedures and bidding instructions, and that those are distributed to the subcontractors. So the first thing we have to do is get all of those documents translated into the language of the country. So once that is done, all of our communication is done through the general contractor, who will have an English-speaking representative, and they will notify us of all the subcontractors that are going to be on the site. Since these are general liability programs, we don't have to have as much documentation for the insurance carriers, so we don't have to have a lot of communication with the subcontractor. So we're able to easily just track the subs on the site, the type of work they're doing when they start and end work, and their own construction value. So we're tracking the exposure and giving the exposure to the insurance carrier on an overall job site basis. So it makes the process much simpler. And then instead of issuing a certificate of insurance to those subcontractors, we issue them just an evidence of coverage. And again, that's translated into the language of that country.
Okay, great, thank you. I guess we're going to go to, this is a question probably for Leah. This is a question we got from Paula, as a broker in Chicago. On a GL only program, what kind of credit should an owner expect?
Yeah, so of course this is going to vary based on the region of the country that the project is in, but in general, using the database that we have, I would say the general contractor's credit is going to be the biggest factor and is going to be the largest value that's going to affect your overall credits. And those can range, depending on the general contractor's experience, from 0.25% to 0.75% of the overall construction value. And then with regards to subcontractors, we typically see around 0.5% of the subcontracted costs on a project. So to get your overall, you'd add the percentage from the GC plus the 0.5% from the subs. And I think that's a good conservative estimate as for an average over the country.
Okay, great, thank you. Jennifer, we'll go back to you. This is a question from Jennifer. What do you see as the biggest challenge with wrap-ups given the economic changes?
Biggest challenge in wrap-ups. You know, I don't know that it's necessarily a challenge. I feel like the economic market is really leaning more towards favorably, is acting more favorably for wrap-ups. We do see that the market trending more towards general liability only programs versus the full comp and GL. I think that, you know, that has something to do with economic factors. The other thing that I think the economy really impacts is the type of construction that you see. So like back in 2007, 2008, 2009, when we were in a recession, you saw a lot of the private construction go away, but you saw a lot of influx of public projects. So I'm not sure that the economy has necessarily directly affected the wrap-ups themselves as much as it just has the complexion of the wrap-ups.
Yeah.
Would you add anything to that, Josh?
Yeah, I think a bigger issue is not, I don't know if it's economic, but I guess it really relates to the insurance market right now, especially with any of the brokers on the line with the excess markets, with lots of reinsurance treaties not renewing, difficulty for contractors to get the proper capacity with the right coverage. We do think it's it's favorable for wrap-ups because it is a product now where you could put finite costs on a project, known limits, and you don't have to really deal with these market changes. Let's see, what other questions? We have a question from Susan, a broker out in California. Jennifer, I'll go back to you on this one. And then we could have Leah and Amy jump in if they have any comments. What are the biggest factors in having a successful program?
Well, I think one of the biggest factors is starting early. So Leah mentioned a lot of times these GL onlys are coming on late. When they come on late, you limit your ability to really analyze the market, analyze quotes, get more information. You limit yourself really to a deduct program, depending on how late you are in the game. So you're not able to evaluate the type of program that fits you best. And then oftentimes when you're late in the game like that, you're going to be taking the subcontractors by surprise. And we really believe in getting the program documents set up early and distributed early with the bid packages so the subcontractors know what to expect and that they're submitting a proper bid. So clear communication and your ability to really design the program the way you want are the two biggest things you're going to gain by starting early. And I think that's really going to set you up for success. That while the program is going on, loss control is a huge factor. Obviously, if you don't have good loss control, if you're having a lot of losses, then your program's not going to perform well financially. And then the other thing is communication. We do a lot of communication with the job sites, try to stay on top of who's coming on the site, and just stay ahead of any issues. And good communication is really key.
Great. Leah or Amy, anything you'd add to that? Or otherwise, I have a question that kind of goes to, I guess, the next step for enrolling contractors. So we have a question from Dan at Carrier, New Jersey, and Leah, I'll go to you on that. What do you do to ensure all contractors are approved before entering the job site?
Yeah, that's a great question. So first, what we want to do is evaluate each client and general contractor's requirements for allowing someone to start on site. So that could range anywhere from just being enrolled and having an evidence of coverages that aren't being provided by the wrap-up, or it could range all the way to they need to be enrolled and they need a fully compliant certificate of insurance with all the requirements met, all endorsements on file, and a credit calculated. So first we want to evaluate what the client expectations are for allowing someone on site. And then we use our reports and our Rap Sheet website and our, we actually have a mobile app to where we communicate with the general contractor and their safety team or their on-site gatekeeper to display whether, very simply, yes or no, is the subcontractor allowed on site. So we kind of gauge what their best practice is going to be. Do they want to receive an email with a report where they can pull that up on their computer daily? Do they want to receive, just have login information where they can, from their job site trailer, log in and run a report themselves? Or do they want to be able to look at their mobile phone or their tablet and simply type in a contractor's name and the sub shows up in red or green? So we have various tools to allow the job site to see who's approved or not.
Great. Here's another question. I don't know, one of you guys could jump in. Maybe Amy can even talk about what she sees on the search side. But this is a question from ML. Are you finding less domestic carriers are providing coverage for residential projects? Are there states that are more likely not to be covered?
In regards to residential projects, most of the ones that I see are in New York and Jersey at the moment. And what we typically look for is that the subcontractors that are coming onto those project sites. We do verify for residential exclusions and the type of residential work that these GL policies would allow them to perform. We're seeing more and more of those exclusions pop up on GL policies. So yes, it is something that we have become more aware of as of recently.
Okay, and Leah, are you seeing, as far as the capacity of the carriers that are writing these programs, are we seeing much coming from London and abroad, or are you seeing more domestic carriers playing in the space?
I would say most of the programs dealing with residential projects are domestic carriers that I deal with.
Yeah, but all E&S, I would say, right? Excess and
Yes.
surplus lines.
Yeah.
Okay. Let's see, Amy, another question for you, because it has to do with certificate tracking. This is from Bill, who's a broker in Connecticut. If the general contractor of a program is tracking COIs, why would CRS do this as well?
Yeah, that's a great question. Typically, the carriers of these programs require the administrative staff to track the COIs. They do that because they want to keep a record of the subcontractor's carriers in the event of a claim. So we obviously take that on as the administrators. The other thing that we've realized is once the GCs actually see that we're doing this and we're doing it quite effectively, they like us taking that responsibility off of their plate. They always have access to the COIs and any other documents they need through our certificate library, as well as those compliance reports and the reporting features I mentioned earlier. So it tends to be a really good relationship where we can take that and help the GCs with that task.
Great, thank you. This next question, Jennifer and I have had difference of opinions on. I think the first part of it maybe Leah can answer, and then Jennifer and I maybe can talk it over. But this is a question from Samuel. What size general liability deductibles are you seeing on CSIPs, and what portion of the deductible is typically passed down to the subcontractor?
Yeah, so I'll just start with saying typically we are seeing a smaller deductible on the GL. So anywhere from 10,000 to 25,000. You may see a 50,000 every now and then, but as Jennifer mentioned earlier, the GL onlys are really done more for coverage purposes, and you want to provide that subcontractor that first dollar coverage. So a lot of times we do not see the deductible being passed down to the subcontractors, but if we do, it's typically pretty small, like 5,000 if the subcontractor was proven to be negligent there.
Jennifer, anything you'd weigh in on that, or?
No, I mean, I would agree. I would just say that, you know, if you're trying to pass down a deductible, then fairly that should affect the insurance credit that the subcontractor is willing to give back. And I think that's where the sticking point becomes, you know, particularly if you're trying to pass down like a $5,000 deductible. And brokers like to think, oh, or the owner or whoever, like we're having the subcontractor have some skin in the game. But I think it becomes really hard to administer, particularly on the GL onlys where you're seeing a lot of these being completed operations claims. It's likely that you're not holding retainage at that point. So then how are you going to collect it? Now you just gave up part of your credit for a deductible you can't collect. So, you know, I think you just have to have it really well planned out if you're going to try to pass down any deductible.
Yeah, good points. I think what we see becomes really more effective is really more implementing more of an incentive program for the subcontractors. So instead of implying a penalty like Jennifer is saying, some kind of incentive program usually leads to more cooperation. And I think, again, the biggest concern is really enforceability of that deductible, especially after the project's over. I mean, the whole point why the sponsor bought the wrap-up was to have coverage for the project. They didn't have to deal with the administration of finding subcontractors down the road. Whereas if you're going to go back and charge deductibles, now is a subcontractor still in business, and are they going to be able to pay back that money? Let's see. Another question we have from Jennifer. This is from Brian, a broker down in Washington, D.C. I know big brokers have built their own software solutions and others have purchased off-the-shelf products. How important is software for wrap-up admin?
Yeah, great question. I mean, we get asked about software all the time. Of course, we have our own proprietary software that we began building in 2002 and continue to improve upon on a regular basis. The importance of the software is really to make the process easier, both for the administrator and the participating subcontractor, and then to aid in communication with the job site, with the general contractor, with the owner in terms of reports and things like that. So the software can make the program more efficient, but what really matters, what's really most important is the team behind that software, the people who understand the wrap-up, understand the coverages, and the ones who are going to be doing the communications. So it's really more about the service than it is about the technology product. Technology makes life easier. We all love technology, but if you don't have good people behind the technology, it's not going to magically make your wrap-up amazing.
Good points. We have another question. I guess we'll stay with you, Jennifer, and maybe Leah could jump in. This is from Adam. Are you seeing any specific states that wraps are not as attractive or receptive? If so, any commentary as to why that may be the case?
So I guess if we're talking GL only or byline, of course, there's some monopolistic states where there's not going to be comp. There's some states that do have laws and regulations around wrap-ups. You know, states like Nevada require special approval and things like that. I think that in general, you're getting more cost savings in the coastal states, so West Coast, Southern, East Coast, things, you know, and then like in Chicago or some of the bigger cities. There's no reason in the world you can't do them in the middle of the country, just that insurance tends to be cheaper. And if cost savings is the main factor, that maybe it wouldn't be as attractive then. But and I think too, in those states where there is more litigation, it makes a lot more sense to put a wrap-up in place where you make sure that there's that continuity of coverage.
Yeah, I would add just also on from a byline standpoint, I don't think you can have this conversation without mentioning New York, because New York is completely a different animal, mostly because of labor law, poor experience by wrap-up writers. So I'd say New York is definitely a problematic state, whereas we say most other states to really qualify to do a byline or for it to make financial sense, you need about 100 million to 150 million of hard cost construction value. I'd say now in New York, we're looking at upwards of 350 million to 500 million to really make sense. And then just like in other parts of the country, when you could have up to 10 carriers looking to write the risk, in New York, you really have maybe one or two. And the truth is you really have one trying to beg them to write the risk. So New York is definitely a problematic state as far as wrap-ups, at least while labor law is still in place. Well, since we're almost out of time, let me ask all of our panelists, what's the final piece of advice you'd like to give the audience? Jennifer, we'll start with you.
I think that really, I can't stress enough the importance of properly setting up the program, giving yourself time to get the documents in place, to communicate the program, make sure it's understood, make sure it's in the bid package. Subcontractors don't want to be blindsided. We want them to be our partners in things and have the program run smoothly. And then make sure that you're choosing the right partners for the job. So thoroughly vet out your administrator, your loss control, and any other partners you're using that you're going to enjoy working with for 12 to 36 to 48 months, and that are going to give you the service that you deserve.
Okay, Leah or Amy, any last words of advice?
I can go. This is something I tell my team every day, and I always encourage it for everybody. When it comes to reviewing exclusions and endorsements, read them twice because you never know what you're going to find the second time around.
Great. Leah, anything, or are you good?
Jennifer took all my things, but yeah, I would just second, like, getting ahead of the game, making communication key, having great partners, and having a general contractor and subcontractors that realize that you're doing a wrap up to benefit, not only yourself, but them as well, and having them on board, and, gung-ho for the process keeps just makes the process smoother for everyone, and ends up with better results in your program.
All good advice. Unfortunately, we weren't able to get to all the questions, but we will be emailing everyone a PDF with questions and answers from today's session. So even the questions we weren't able to go over today, we'll send it out and share with everyone. Want to thank everyone who joined for today's webinar. Special thank you to our panelists, Jennifer Philippi, Leah Stewart, and Amy Lamb, and Joanna Stasic on our marketing side to help set this up. Thank you all for your time, and have a wonderful rest of your day. Stay safe and healthy, everyone.
Thank you.
Bye.